Markets are down extensively across the board globally, and here we are, we're up 0.8% on the JSE All Share. Is this just a relief rally? Could we see sustained gains going forward? Because we've seen this kind of move before and only to be disappointed the next day.
I think it was very important to understand that the American markets are closed. So, if you're flickering 2% down in America, that's already happened. Nothing has happened today on their market. I think having a look at the South African market, we were definitely buoyed by higher recoveries in our resource shares. I mean, the Rand's gone to R8.50 now, and that certainly gives some support to resources. So last time I checked, we saw pretty decent rebound in Billiton, some Anglo, Sasfin and so on, and those have heavy weightings on the stock exchange. So we were up quite nicely, but from about 4 o'clock onwards, we tracked downwards. If you had a look at Europe, also some big reversals there. German stock exchange, French and British stock exchange all closing negative today as far as I can see, or still down at the moment. And mainly due to the precarious situation that we have in Europe and the European debt currently. I think Angela Merkel spoke about some of the bonds there, the European bonds, and that's just not going to happen. And that's what everyone's hoping for, this big Euro bond to help bail out Europe. And
well, perhaps they'll be forced to rethink that.
I think so.
I mean, we had a dismal bond auction in Germany yesterday. It was won, and yes, it might not happen again, but if it does, might just
that's exactly
Germany
what the markets are feeding
and
off. And today's a perfect example. America is closed, but still, issues in Europe, and we see a massive pullback.
So you mentioned Anglo-American. It's down 0.7%, but BHP Billiton was up 0.25%. And the disconnect between the two stocks was actually far greater a little earlier today. So why Anglo-American coming under pressure quite a bit when BHP Billiton is in positive territory?
As far as I know, there was a little bit of a re-rating from a few analysts on some of the materials that Billiton has. I glanced at that report. It also came out very late this afternoon. I wasn't available to read it in any great depth. But in general, there's been quite a big disconnect between Anglo-American and Billiton for probably the last couple of years. And I think that's just a factor of the geographical spread of the two companies as well as the management style, I would say.
We had Anglo Platinum also down 0.4%. Just looking at the red on the top 40 behind us here, ArcelorMittal down almost 1%. We had Lonmin also shedding some ground. Pretty much a very strong day that we saw for some of the stocks, especially some of the industrials. I mean, looking at Shoprite, for example, up just over 3%.
Correct. I guess also Tiger Brand seeing quite a nice rebound. I'd say maybe a bit of flight to safety. Shoprite's a good, solid company, great results, good dividend yield. So maybe some buying there. Maybe a little bit of pressure on the platinum stocks. I mean, platinum's a bit of a no-go area at the moment. Doesn't matter when you buy it, it just seems to go down, down, down. And I think that's just following that trend currently.
And Woolworths also up 3%, Tiger up 3%,
Tiger Brands was up.
With Pick n Pay had results yesterday.
Yes, correct.
Well, with regards to some of the other results out, Vusa was quite an interesting one to look at because we saw earnings, the first half diluted headline earnings per share down around 90% to 6 cents. But on the revenue front, revenue up 23% if you include the acquisition.
Correct. They bought into retail, basically printing. Vusa is interesting because it's a bit of a proxy for the economy. What the results show is they show that the general consumer out there is still under pressure. I mean, for those that don't know, Vusa's got the new Metro brand and exclusive books, and Gallo, which is a music CD brand at the end of the day. And generally across the board, they saw quite a reversal there in demand. In fact, the only side of the business that did fairly well was the printing side, as well as I think Van Skyke, indicating obviously more students coming into tertiary institutions. But in general, a very poor set of results. Seems that management is going to batten down the hatches, I guess, and try and save as much money and cost cutting as possible. But it's not a share that I'm personally interested in at the moment.
What about shares that are linked to Chinese growth? We had the flash PMI number that was released yesterday, disappointing many. Do you still want exposure to China right now?
I mean, China's still growing by 8% if you believe the protagonists that look at an 8% growth level as a soft landing. I know there's quite a large amount of individuals out there that believe China's a bit of a bubble at the moment. Our house is not one of them. We definitely have a look at South African companies that benefit from emerging market growth, specifically in China. So we're still quite happy with your resources that export a lot to China, as well as companies such as Richemont, the luxury goods business, and Naspers with its exposure there on the IT side of things with the internet service provision that they have in Tencent, which is one of the largest internet service provision companies.
So you would be allocating new money to Naspers, Richemont, to some of the resource
at the correct prices, absolutely. I mean, Richemont's an absolute steal, at about below 40 Rand. I would say coal companies that export to China and India. Naspers as well has come off from 400 to around about 350 Rand I last saw. Sasol, for example, I mean, obvious things like energy and so on. I still think there's tremendous value in those companies. You just have to kind of swallow the pill and understand that volatility is still going to be here as long as Europe is up to its shenanigans.